Bitcoin Edition's Web3 interview. This is where the world comes for the cryptocurrency and blockchain based news. I'm your host, Gina, and today we have with us Head of Product at ANKR, Mr. Josh Neuroth. Welcome, Josh, to the show.
Thanks for having me. Thanks for having us. Appreciate it.
Awesome. So, Josh, you are here to talk more about the cryptocurrency market trends that's going on. So, let me first start with that. How do you believe the current state of the cryptocurrency market and its overall trajectory is moving towards?
Yeah. So last week I was at Ethereum Community Conference in Paris, and I think it was the biggest ever, maybe even the biggest blockchain event in Europe. There was almost 10,000 people there. I think I heard that Ethereum Community Conference only had around 5,000 tickets, but there was at least 5,000 other people that had attended other events like the Modular Summit. There was InfraCon going on as well, and many other events. There was over 100 events throughout the week to go to. So the energy that was there is hard to describe. It really is like you wouldn't really think that the market was suppressed or depressed in any kind of way being there. You know, it was a lot of builders. There's traditional companies there finding out how they can use Web3 infrastructure. I thought it was just amazing, honestly. And you know, in regards to that, I think there's a maturity that's happening in the market right now with the projects. And I've said this elsewhere on my social media, but you know, I think a lot of these protocols and dApps that have tokens and also the layer ones like Ethereum, you know, they had these crazy valuations 2 years ago in 2021, and what we're seeing right now is the user experience improve. We're seeing more apps roll out, and I think they're starting to really justify their valuations out there in the market. So I think it's really healthy for this market, not to just be based on speculation, but based on revenue, based on, you know, traditional things like utility. So all that is really moving forward, and I think we're in a very good place right now. And I'm probably the most excited I've been to work in Web3 right now and here in mid 2023.
Amazing. Awesome. Also, with respect to the recent price volatility that's happening in the cryptocurrency market, what do you believe are the factors that leads to this?
Yeah. I mean, there's definitely been some volatility. I think we've hovered for the last 6 months. If you use like the USD metric, we've been around 1 to 1.2 trillion is a total market cap, at least what's tracked on Coin Market Cap. So to me, it's not been as volatile as I might have expected. I think we've almost been more like a traditional market, and that's probably good for this space. You know, I remember, you know, 5 years ago we'd go 80% drops on, you know, things. Now it's really seems more like a 20-30% volatility, which is a lot better. It's about better for the mental health of us builders in this space, I think. But you know, I think what's happening is, you know, this community, the crypto community of Web3, like there's a lot of hype the last 2 years, and people kind of came in either speculatively investing or building, and there are more builders, but there's not like this massive influx of people coming into the space right now. It's definitely growing. And, you know, without more people coming into the space, I think we'll just probably be in a more steady incline, if that makes sense, as people expand kind of their products, expand their protocols. So we'll see. You know, no one really knows. I don't know. It's just my own speculation, my professional opinion, but I don't really see as, you know, people are talking about like, oh, when's the next bull market? That might happen, but that might be more of a factor of external forces if it does happen in the other markets with high interest rates. You know, institutional investors are getting really good returns just in, you know, traditional fiat right now. So, you know, investing in crypto isn't as attractive as it was when we had, you know, negative interest rates 2 years ago, or you know, very low interest rates. So, you know, I think that's you know, one thing that we'll have to see what happens out there. We have a conflict in Eastern Europe right now too. We have, you know, there's a lot of things going on. So we'll see. But regardless of all that, builders are building. You know, The apps are getting better and better, and the layer two space with the rollups is really heating up with zero knowledge proofs. That's exciting, and we'll see where that goes.
Awesome. Exactly. So, like you said, there are a lot of XYZ elements that are seeming challenging. Also, there are a lot of growth happening. So, in the future, what do you see? Where does the market landscape is heading?
I think I just said this, but I don't think we're heading for like an extremely volatile, bull market. I think we're growing a lot slower than we did in previous years, but it's healthier, and maybe we'll see 5-10% per year. I think that's, I just don't see any big external forces that will bring a lot of people into this market and this space quickly. I think it'll be more of a slow, really more of a slow, like traditional growth trajectory.
Awesome. So, also with respect to the changes that are happening in the crypto market space, can you, for our viewers, explain if there were any regulatory changes that came across that led to these changes, these evolutions?
Yeah. Yeah. I don't know if the regulatory changes or to me, it's actually like we have in Europe, there's a lot of positive movements for the crypto and the Web3 market, in particular the crypto space. And in the US, it's rather gray area right now. I think there's no regulatory clarity whatsoever. So that is I definitely hurting some of the protocols from moving forward. I don't know how much it's influencing investors in this space. I think about investors primarily as institutional investors. It's probably not stopping them from investing in Bitcoin and maybe ETH, but maybe some of the other kind of emerging tokens and layer ones. There is regulatory unclarity around those. So it's probably slowing down this space, but it's definitely not stopping it. That regulatory uncertainty. So builders, this community has been building for years without regulatory clarity, and that's just going to continue. But as an American, I'm very frustrated with the situation because I'm seeing entrepreneurs, startups kind of move into Europe, where traditionally America has kind of led the tech space in Silicon Valley, and so that is a concern to me.
All right. So, like you said, currently the crypto market is in a gray area. Now, this has happened from a very strong boom. If it's currently in the gray area, this all started with the crypto winter that came from the Ripple versus SEC case. And what is your take on that, on the Ripple versus SEC case?
Well, it's very much still in process. I think I noticed some comments in the community acting like this is like a done deal. I mean, I think we're in, still in round one of maybe a multi-round situation. And so it's really too early to say. I think there was some positive news, but in the United States legal system, there's several appeals that will probably take place. And then, it may go to the Supreme Court, it may not. By the time that this situation kind of resolves itself, we will probably have a new administration in office in the United States. So I think there's some positive there, but ultimately, to me, it was very non-conclusive. And I think to us builders in this space, it really didn't mean, the positive ruling from that circuit judge doesn't give us really any more clarity than we had before, until there's either some kind of congressional bill that goes through and gets approved and signed by the president, or the SEC kind of provides a very clear regulatory framework, which they have not done. So until either of those things happen, I think we're going to still be in a very gray area.
Speaking of the having no concrete regulations, like there's no bill passed from the president, and the judge's ruling is not going to give much of a space for the builders out there. What more do you feel are the challenges that the crypto market currently faces, and how do you propose that the people can address that?
Well, the way that it is being addressed is I think companies are moving and crypto projects are moving offshore. Certainly you have crypto projects that don't organize in any legal entity, and they do that for a reason, right? So there is no entity to provide a lawsuit for. I know several successful crypto dApps that have no address. They have no US bank account. They're just really functioning as an online business. And that's unfortunate, because I think that there's other jobs and things that could be created if they were allowed to do that, or if they felt comfortable doing that. But I have seen entities kind of move offshore recently, or even just get started offshore in the first place, which is kind of what's happening. So it's more of a legal thing. I don't think it's really stopping the really hardcore DeFi builders. However, I will say, I think the next phase for this space is really, we always talk about mass adoption. What does that look like? I just saw, at Ethereum community conference, Genosis Safe just announced that they have a multi-sig wallet that is able to be used with a Visa card, and that's rolling out in Europe. And that it's like extremely cool that you can have a decentralized DeFi self custody wallet, and then use those assets on a traditional payment network. That's not available right now in North America because of the regulatory concerns. I think they're trying to work towards that, but things like that, adoption, user experience, those are going to stall without that regulatory clarity, which is unfortunate.
Agreed. Also, in your observation of cryptocurrency market, did any blockchain use case or blockchain sector catch your attention that is gaining traction in the cryptocurrency market?
Yeah, so I think there's definitely some amazing. So I think if I could classify the last 2 years or so, or even 3 years, it's been companies, or I should say networks and chains, that have come out and they're addressing one area of Ethereum that might be lacking, like gas fees or scalability or interoperability or something. But the excitement right now is definitely like building on Ethereum through the rollups, in particular through modular blockchains. And I think we've really solidified that there is going to be no Ethereum killer, and the future is just building on ETH. And so people for a while thought that the roadmap would include sharding, which is basically like effectively side chains being able to handle block space to improve the speed of the network and to lower gas fees. But now it seems like the direction, it's generally accepted that we have so much traction kind of in this layer 2 space for chains that are running on ETH that's probably going to be the way things go. So I think layer 2s are here to stay. At ANKR, we've integrated many of these: Arbitrum, Optimism, ZK Sync, now Polygon and Polygon ZK EVM. All of these chains have incredible traction, and keep getting developers to build on them. So those developers are most likely, once they make the move to those architectures, they're going to keep doing that, I think. And so we'll see that layer 2 space really grow and mature in the next year or two.
Gotcha. All right. So now let's talk a little about ANKR. So can you please give us a small overview on what ANKR is doing, and moreover, particularly about the liquid staking solution that ANKR provides?
Yeah. So I would think first and foremost that at ANKR, we are a Web3 infrastructure platform that is slowly transitioning into a protocol. So we saw opportunities early on to build, and we're about 5 years into this now, to build tools and services that really help developers, builders scale their apps, scale their infrastructure. So our core product is really a connection to the nodes, and you use that for reading and writing data. We also have liquid staking infrastructure. I think some of the OGs in the space know this, that we were kind of the first to market on liquid staking in December of 2020. And so in some ways we helped invent kind of some of the strategies and the tools that I think have been adopted in the space. And so we've rolled out that liquid staking into the multi-chain space. We support Polygon, Avalanche, Phantom, Binance liquid staking. But what makes us different from maybe the Lidos and Rocket Pools? We're very focused on the developer side, building liquid staking SDKs, helping other DApps integrate our liquid staking kind of behind the scenes. We've done that with Helio on Binance Chain, and there's a new protocol called Davos that we're working with now on that side. So, there's a lot of strategies, and I think liquid staking is here to stay. I mean, there's restaking protocols like Eigenlayer. There's people like Tenet working on liquid staking derivatives. And so there's like this whole ecosystem that is really being built on this liquid staking foundation, which is insanely awesome to see. So we see who liquid stakes with us. We see everyone from just like regular traders that have, or we see some whales, we see developers, but also we've been noticing that other protocols and chains, their treasuries are doing liquid staking with us. And so we're very integrated kind of into those teams, and seeing them bring their assets into our liquid staking token is really great to see that.
Interesting. Also, Coin Edition recently heard that ANKR had partnered with Microsoft. ANKR has partnered with Microsoft and Tencent.
Yep.
So can you?
Absolutely. Yeah. So I think what's if you look at the the big clouds, there's a handful out there, and then there's a long tail of other kind of smaller cloud providers as well. Their customers are large enterprises, gaming companies, and those customers are asking them about how to do Web3 nodes, how to run validators, how to build high performance infrastructure. And so in many cases where we've seen kind of that demand organically, and they've come to us and said, how can we partner? How can we help deliver this service? And so that's exactly what we've done with Microsoft, with Tencent, is make our very scalable high performance infrastructure available through their clouds, really for that in the case of Microsoft, the enterprise verticals, and then through Tencent, especially for their gaming customers. And so Tencent is a massive provider of infrastructure for games. Here in North America, I don't think we realize how big, especially the Chinese gaming industry is, and so that is definitely of interest to us to be there to support that, to grow with them, especially in that Southeast Asia kind of area. So Tencent has a very good presence there with their clouds, and then Microsoft certainly in the US, Europe, and beyond. So we're just getting started with them. We have more things planned, but for now we're providing those really high performance nodes to their customers, and making available our services to them.
Awesome. Thank you so much, Josh, for that insightful session. So it was a very crisp and crux interview, and it's my pleasure to have talk to you. Thank you so much.
Yeah, thanks for having us. You have a great day, and hopefully someone on our team can be on the show in the future.
Awesome. We look forward to that. Thank you so much. Also, back to our viewers. If you loved watching this content, please go ahead and like, share, and subscribe to this channel. Until next time, this is your host, Gina, signing off. Bye-bye.